you got the little baritone going there a little bit. I
You,
like
you,
that.
you know I got that deep baritone in me.
All right, I wonder what Dennis wants to talk about, but
We
we'll get.
we gotta start the stream, Mitch. We didn't start the YouTube
What do
stream.
you mean? Of
I
course we
mean, it's
started it.
not going, and the chat's saying it too that we're late, but we're not late. It's going, but I'm looking at the YouTube stream, and there it is. There it is.
Come
Right now.
on. Come on. What do you think? I'm Ryan Cohen?
What happened? What
What
happened?
do you think? I'm selling out to the
No,
guys?
for real. For real. It didn't have any. It just started just now.
It just
It
had a
just
little
popped on.
lag.
We
Sometimes there's a
missed the
little
intro.
lag,
We missed
Dennis.
everything.
Look
What
at
happened?
everyone. You're late. Man, look at that. Fired. Wow, what a rough
We're trying to
here.
figure out what happened.
I
don't know what happened either. I didn't refresh. It just didn't start on time. Mitch was there. He was on time, but the YouTube
We
didn't
hit
start
it,
on time.
but maybe we'll call StreamYard after,
Well, you know what it is? It's the YouTube algorithms. They're trying to figure out where to send our show to on a global basis. They're now sending it to the metaverse. We're down 37 and a
we're in
quarter
now.
handles, kind of a weak close. This is the lowest we've been all week. We're making a new low on a Friday here. So this will be interesting. Market must get off the mat here. As I said, down 37 handles. Crude up again, down a $1.70 at 88.41. Gold at a 3-week low, down 640 at 1764.80. Silver working its way towards 19, down 31 cents at 19.15. Bitcoin, holy macro, highly correlated to Bed Bath and Beyond. That's down 1980 at 21,355. Ethereum futures, they're down $170, 167.50 at 1702.50. So, you talk about the news, you look at the news, and I have triple BY up on my screen, and I'm looking at it, and I'm like, okay. I didn't have any of my news platform up. I'm like, okay, Ryan sold, and I immediately texted Dennis. I said, Dennis, lay off Twitter. Well, he didn't listen. He's all over this. Let us get going on it, Dennis. This is just. Hopefully, this is not symptomatic of what is going to happen in the overall market.
I don't think it's, and some people are saying this has caused the overall market sell-off. I don't think that's the case, but I do think it's obviously caused a sell-off in GameStop. It's obviously caused smaller sell-off in AMC. But some of the high short interest names are getting hit here as well today. So you do have that spillover. Obviously, direct related is the GameStop because of Ryan Cohen. The news, obviously, Ryan Cohen, if you were on a desert island last night, Ryan Cohen has sold his entire stake in Bed Bath and Beyond. And I was looking through, he actually on Twitter, they were handing out and showing the different sales. And he sold some at 29, some at 27, some at 26. Looks like most are between $18 and $29. So he had some really good sales. He should be a day trader. He timed that top pretty well, at least on some of the sales. So he obviously has jumped ship. And that's making everybody in Bed Bath & Beyond jump ship here this morning. It's down 42%, getting hit. I do not think it's a coincidence that Bitcoin is having its worst day in about a month right now. I don't think this is a coincidence. I think you have a lot of people who, the FOMO chasing stuff like Bed Bath & Beyond. I think there's a lot of overlap with some crypto investors as well. And I wouldn't be surprised that the Bitcoin sell-off is directly related to the Bed Bath & Beyond hammering this morning.
What else is there to say? 10. I'll just give you guys the pre-market low, $10. Just under 10 is where, and that's just probably shorts bringing it in here. So that's it. I certainly hope. And I was going to say this the other day was, I sure hope that the people that listen to this show, I sure hope that you're trading this and that you make money and you get into some kind of other investments. Maybe you should have been at the webinar yesterday. Just do something else, because if you're fortunate to make it on these kind of stuff, man, just put it in the bank. And I certainly hope that no one got caught and
we can hope that all we want. There's a whole pile of bag holders in this thing, Joel. I mean,
I'm just concerned about our chat, our people. That's what
he sold 100,000 shares at 29. There's another person on the other side that bought 100,000 shares at 29. So exactly. I mean, you look at that and you just think, shareholders are the bag holders here. I mean, he had a tweet from, I don't want to read his tweet, and this is all I'll say because I'm probably going to get heat because he'll still be the Ryan Cohen defenders. But I was looking at this tweet that he had from June, And in the tweet, he states, so I'm going through his Twitter following right now if I can find him. Ryan Cohen. Okay, I'm looking at his tweets now. He doesn't tweet a lot, so you can find it fairly quickly. Go back to June 29th, and he tweets, I'm sick of seeing failed executives make millions in risk-free compensation while shareholders are left holding the bag. This is
the worst
interesting
type
commentary. That's
the worst
what
type of people.
Yeah, here, I can retweet it. I'll retweet what he said. I just retweeted if you want to read it for yourself. I mean, what did you just do, Ryan? What did you just do to everybody? Everybody else is holding the bag here too. You sold some shares at 29, 27. I mean, you talked about the long, being in this a long term, the stock gets, this pop because you disclose your option sale and he sells into it all. So it's disappointing to me, to be honest. There's going to be some people who defend Ryan Cohen here still.
I don't know
did he
how.
do something illegal? That's to be determined. I honestly, I highly doubt he's going to go to jail. People are saying he's going to go to jail. I doubt it. I mean, he just made a hell of a lot of money, so he's been able to lawyer up anyways. But, unless he's, trading on some inside information, disclosed it. It looks like he kind of dotted the I's and crossed the T's. But, I mean, he's jumped ship. And now everybody else is left holding those bags. So exactly what he tweeted, he's now made a lot of bag holders in Bed Bath & Beyond.
All right, I'm going to jump in with some information here. So, of course, he sold on Tuesday and Wednesday at ranges between 1868 and 29.22 per share. He made about 59 million on this transaction. Also sold the call options that he had, so it's completely out. And I think, this is the worst type of a person, the person that acts like they're on your team. They act like they're on your side, but really, they're just trying to make a buck off of you.
Yeah.
And that's exactly what happened here. I think, who gets left out of this is, of course, a lot of retail getting screwed here. And that's the simple way to put it.
The little guy. The little guy's getting screwed.
The little guy. And you know what you get left? You get left like, did you guys ever see that episode with Homer Simpson and Krusty? That's how I feel like we're right now. I'll show you guys the meme here, but I was too busy selling out. If you guys have seen that episode, check out that episode. That was one of my favorite episodes. Of
Ryan Krusty the Clown Cohen.
Oh boy, there we go. Oh,
I'm gonna take
that's
heat
what
for
I
these
feel
comments.
like.
You know what though? I didn't take any heat. I was giving Bed Bath & Beyond and Ryan Cohen some heat last night on Twitter, and I didn't take any heat last night. Nobody was saying, because everybody's saying, oh, he just filed. It doesn't mean he's going to sell. And literally, he was selling. He was selling it all. So, I mean, that's the point. That's where we're at. Bed Bath & Beyond down to $10 here. It's not coming back to 30 anytime soon, I don't think, unless Ryan, maybe he's going to rebuy, Joel. Maybe he's a trader. Maybe, you know what'll happen? He'll come in and rebuy it all now, and then it'll pop again. That's not off the table. Maybe that's going to happen here too. It's not off the table. What if he comes in and buys it all again and discloses, oh, he's bought, the whole thing back in? Will it pop up to $30 again?
Now,
I don't know. That's not off the table that he could rebuy the shares.
The question is, do AMC traders, right? Of course, because that's kind of their leader right there. Do they start getting to the point where they're like, well, I don't like you anymore, Ryan. I need to get out of this now.
GameStop, you mean? Yeah, GameStop.
Yeah, GameStop. Well, all of them, to tell you the truth. I think at the end of the day, now you might see that flush out now. I think this might have been the final straw.
Now. Do they come in and just buy the dip on these stocks again? I don't know. Bed Bath & Beyond bounced right where you thought it would. I tweeted it out last night as it was getting there. It was hitting the 10. They were hitting the 10 bids, Joel, and it was big size there, and it bounced off of it. So BBBY bounced right at 10. We'll see if the 10 can hold here today. That's your line in the sand. That's your major support. It's $10. I mean, the stock was at 32 days ago. You're talking about $10 support. So if there's support anywhere, it's $10. But I don't even know what to say on this whole issue here, other than I think he sold out too. So I'm not a fan.
Not a fan at all. And let's go towards the Bitcoin talk, though. I do want to point to some Bitcoin stocks. Bitcoin trading under 22,000. Bitcoin dropping fast, pulling down the miner stocks. So watch out for Riot, Mara, MSTR. I mean, there's a bunch here, but they're definitely getting hit hard in the pre-market. Coin, part of that. So just be careful on those, as we're starting to see the kind of Bitcoin not being able to hold up.
It's been very quiet Bitcoin here for the better part of 2 or 3 weeks. And as the market has been going up, did you notice this, Joel? Bitcoin was not participating. Bitcoin had its good run in July, but really in August, it's kind of was flat for the month. And now all of a sudden it's starting to sell off. And we were talking about this a couple days ago. You could read the tea leaves. You know, you had some risky stocks like ARKK starting to break down
Came
2,
in,
3
yep.
days ago. S&Ps were still holding up, making new highs, but ARKK, which was your leader on the downside, you've got to look at your leaders. We talked about this yesterday in our webinar. It's follow the leader. ARKK was the leader all the way down for the markets in the first half. Now, all of a sudden, it's starting to roll over here too. You get stocks like Block or Square, whatever you want to call it. You know, it's down at 77 here now. You're starting to see rollovers in some of those leaders there. Now, you're still seeing strength in a lot of different stocks. Semis were really good yesterday. Semis had a great day yesterday. But there's still that, you know, those names, and you know,
I've been
AMD,
pointing
Nvidia are not those names because they actually make money. The high growth names that don't make money.
Software names, a lot of those software application names like Snow, like
The ones that don't make money.
Yeah.
I mean, well,
simple
Snow
as
held
that,
up.
right?
We
Look
haven't
at the
seen too much sell off in Snow yet, and Snow is going to report next week. That's one thing to consider too. We talked about that in the webinar too. You know, the positive. You know that sometimes stocks are strong ahead of those reports, but you just look here. I start seeing, you know, cracks. We're seeing cracks now, and then you got to look at the big picture here. We can go into Fed speak here now. I mean, we've given this picture a million times in the show. We're still, even though we top tick maybe inflation, 8.5 is still high. We haven't even really gotten into quantitative tightening yet. You know, they haven't even really started it yet. So, you know, we had quantitative easing for like a decade. And, you know, now we're going to try to go to quantitative tightening. It hasn't even really started yet. So, I mean, the Fed is against this market. And if you're buying stocks, you're fighting the Fed. So, I mean, this recent rally was an absolute gift. You know, we can go to Apple. This move in Apple, I've already hedged my Apple. I hedged it way too far ago. I should have held on, obviously, for another 2-3 weeks because it's just continued to climb up. I was scared of the earnings report, and obviously that didn't matter. The stocks has gapped and continued to go higher. So way early on that, but I've hedged my Apple because, you know what? It was 23 or 24 times earnings. I hedged 26 times earnings now on earnings that are inflated, I think. Like earnings that, you know, not necessarily Apple, I guess, inflated, but there's a lot of earnings that are inflated here right now from that whole reopening. People were rah, spend. You start getting tighter, that yield start coming down. So, I mean, 26 times earnings is not cheap for Apple whatsoever. 5 years ago, it was trading 12 times earnings. So, I mean, now you're valuing those earnings twice as much. I don't know. So that's why, you know, I'm using this opportunity to raise cash. We know my long-term account. I'm almost 50% cash here now. And I'm just comfortable there. I was, you know, I raised up, you know, and bought more stocks back in June and July, but those stocks ran. They had good moves. So time to ring the register on those, that everything you bought back in June and July, in my opinion. Now, again, are we coming in and selling the day we're down 40 points? Because we're probably coming and buy the dip again. You know, again, just reiterating, buy dips, sell rips. If you're looking to get out of stocks, you wait for the rip to sell. We've had rips. And I'm coming in today and selling when you're 40 handles in the hole. And everybody's going to say, oh, Dennis was bearish on the show. And we rallied up, you know, to 426 or 427. Well, you know, I was bearish. You know, I'm telling you, I've been wrong for about a week and a half, 2 weeks here now. I started getting bearish at 412. And then I went bullish for a day because of CPI. And then I sold out most of my stuff at 420, 421. So, I mean, we're almost back to where I started, you know, from, you know, where I'm thinking to ring the register. But I think we're on rips. I think you got to be raising cash.
All right, let's continue going. Let's get into it. Now, one thing I do want to give you guys a little bit of a warning out there is that FOMC member Barkin will be speaking at 9 a.m. So just keep that one on your radar as you get into the open. Don't want to see anyone get caught and wondering, what's going on? Why is the market dropping? Well, just keep it in mind. It could also maybe get a little boost, but we'll see what happens there. Let's go towards our earning stocks of the day. Let's get into Applied Material here. Adjusted Q3 EPS coming in at $1.94, beating the $1.79 estimate. Sales at 6.52, beating the 6.28 billion estimate. Now seeing adjusted EPS for Q4 at $1.82 on the low end, $2.18 on the high end. The estimate was at 194, and then also kind of trying to increase the sales outlook on the high end to 7.5 billion versus the estimate at 6.5 billion.
The report was fine. The problem is you've come into this whole area of resistance here, and it couldn't get up there on the report. 111, 112 is, where you've topped out here for a month of August. And then after hours, we can't get up through that area either. If you can't get up through an area, then you think, okay, well, on a weekday here, I wouldn't want this thing to lose the 108.27 close, because then there could be a reversal day on hand for Applied Materials. But it's already traded a lot of stocks, a lot of shares here. So, maybe it's kind of where it wants to be. It did report at 4 o'clock last night, so there's been lots of hours of trading, and it's holding up well considering the market is down. And you do have a lot of chips reporting next week, and NVIDIA is going to report on Wednesday. So, that can be a catalyst to hold the stocks up as well. But again, it's been a pretty good run here. Applied Materials was $82 back in July.
Yeah, going over 112 here to 113 and change. That was a big move. That kind of surprised you. Just look at all those daily highs in that area, going back to the most recent high at a 111.65. So we'll give you that area, 112, and then also this could be interesting here for me off the open, because your bid right at yesterday's high. And you did have a high on Tuesday right at this area too. So, you could get a pop. I think if I got a pop though, even I'd get out there before, that 111.80, 112 if you get that quick pop off the open. And then, as always, Dennis said, you got a stock that traded down, traded up, traded down. You don't want to see it go red. If they can't to defend the close, and it'll be
needs to hold that,
it needs to hold the close, but not a bad report. Trading definitely percent half better than the SPOOs, so holding up fairly well for now.
Let's go to the Deere report, because it's the most interesting one.
That was the one I was going to, Dennis. Let's get it. Sales at 14.1 billion, beating the 12.78 billion estimate. That now net income they see for full year 2022 at 7 billion and 7.2 billion on the high end. Prior guidance was at 7 billion to 7.4 billion. Deere here.
Jeez,
wow. The earnings miss though, 616 versus 669. That's a headline miss. There's issues here still in supply chain as well, because my parents bought a John Deere riding lawnmower back in April. They just got it last week. It was 4 months to get that riding lawnmower. So there's still issues here with getting getting the stuff on time. So, maybe that's excess of demand, but I think it's just, there's shortage in different parts. And, and you got to wait and you got to wait. It's a different world we're in. It used to be a job, you buy your lawnmower, it shows up at your house the next day. Now it's 4 months later they get the John Deere lawnmower. So that's not great. But looking here at the stock price, you're getting a dip. It's a loved stock. Do they come in and buy the dip? Well, they already have started. I don't know if this is one they're going to buy all the way back, like an Estee Lauder type deal. But, if Kramer says something, you never know. 340, it's already $15 off the high. So I think if you're coming in now, it's like, Deere's cheap, I'm going to come and buy it now. Well, it was, if you were up 2 hours ago, it was $340. It's already rallied $15 from the high. So now he's kind of stuck in the middle. You've gapped down. It's a disappointing report. Now you've bounced back up here. I think it's kind of just stuck in the middle. I think I'm a no trade on this.
What you're going to need to look at, I'm going to give you a little bit longer term numbers here. You had a trio of lows. It's called 362.50, and I would almost get into yesterday's range. So that's your major resistance, and I'm not looking for any kind of rally until it goes bid above that level. Then on the downside, you got a little carried away when it went to 340. If they start to take it out pretty good, there's another daily low here at 48.59. But when I give you guys a level, I'd like to see at least two lows in the area. So if I was looking to pick this up on the cheap ahead of the pre-market low, I'd be hawking 343. So there you go, 343 to 362.5 potential trading range in Deere. And how's Cat already reported, right? So this is
yeah, you see, you do, and good point there, Joel. You get a muted
Cat's
response.
out the hat.
You get a muted response and sympathy when you already had that they've already reported, but you're still seeing a sympathetic move here. It's down $3 here. Cat's right up that 200 resistance. I mean, this stock's market's trading technically right now here, Joel. This is your cup of tea. I mean, look at the 90-day on the Cat. 200 was support back in May, a little bit, or a couple bottoms there just below it. Then we took it out in June, went all the way down, obviously, to 167. Then we bounced up. We tried to get over 200 back on the 29th, but we couldn't do it. Got to 199.49. Now we try and bump our head up against it, and now it's looking like it might not make it either. So, I mean, 200 major, super duper resistance. I don't buy stocks at resistance.
You don't?
Only when they're breaking through, and there's no breakout here to be seen.
Let's go to Foot Locker. Let's see if you were buying the shoes. Foot Locker EPS at $1.10 down from $2.21 year over year. Sales at $2.06 billion, missing the $2.7 billion estimate. Foot Locker CEO Richard Johnson to retire. Mary Dillon appointed president and CEO. Foot Locker sees full year 2022 adjusted EPS at $4.25 on the low end to a high end of $4.45. Consensus was $4.42. Comparable store sales decreased 10.3% year over year. It popped, baby.
Stock, Joel. I think the bottom line is this report was not great, but the stock is just so cheap. I think it's trading like 6-7 times earnings. I mean, we've expected, I think they've been expecting the worst from Foot Locker for so dang long, that we're all going to buy direct, from Nike, and we're not going to need Foot Locker anymore. And it just hasn't materialized. The stock just continues to hold up. So now you get, I don't know if there's short interest in this thing or not. I can go take a look at that. Let's see, 11%. So it's not
that much.
That's something, though.
Yeah.
I don't know what to say on Foot Locker. I actually had a position on this one going into the report, and then it reported, and the numbers didn't look that great, but it ripped higher on it. And then it dipped down quickly. You can't see it in the first bar, but all in that first bar. It went to 35, then went down to 31. Then they ripped it higher, and now it's fine. It's home at 39. It's the kind of stock like you just say, oh yeah, this is irrational, I'm going to short it, and then you get your beats. So I'm not going to come in here and short this. I will say $40 is just a number again. So exactly. $40 is a huge number for this.
Like Cisco, like 50 was the number in Cisco yesterday.
And it didn't go through 50, Joel.
It didn't go through
$50 hit on the kisser. So I'd say the same thing. If I was long this thing, I'd probably ring the register at 39 just because I think 40 is going to be tough. I wouldn't stick around for the last 20 or last 60, 70 cents here. And obviously we almost kissed it there in the pre-market already. I think it's a natural spot for the stock to stall at 40, but sometimes these things, it's got some momentum going, and people are like, maybe a little bit of WTF because it didn't feel like it was that great of a quarter. But I don't know, they're ripping it anyways.
Yeah, this is a tough one here. There's no way that I could buy it at any level here, and if I had a large long position. And today I would just be throwing stock out at like 39.5, 40, 40.5, 41. Just the more, with stacking it with just more size. And then because eventually, I mean, this is a big rip. I think the bullish thing, it's really hard to buy shoes online. I mean, I do it, and I always end up sending them back, man. You got to go into the store. I know everyone's worried about that, but, man, I got to go into the store. I got to put them around. I got to walk around with them.
No one goes to stores anymore, Joel.
I do, man. And then if not, I end up I bought these other shoes the other day, and I'm just like, oh, man, I got to get the return package and everything. So I don't know. Shoes is one thing. I mean, clothes or whatever. Whatever. I'm not a huge shopper.
I guess they didn't like Richard and like Mary because it looks like it, at least from that reaction. At least from the report, I don't see anything that really gets it up there. But what Dennis stated there, I think, is an important thing to notice. The PE forward at 7.2, that definitely makes up. And if you look at the industry average, it's about 15.2. So about less than half of that, their forward PE. And so, hey, who knows? Maybe this is kind of more of a value play here down.
It is a value stock for sure. So talking about value stocks and talking about stocks that just breaking news here, 8 o'clock a.m., right when the show started there, General Motors reinstated their dividend. Woo-hoo! And also talking about buybacks as well. Said under their existing program, they can buy up to $5 billion. So talking about resuming their buybacks and have reinstated. a 9-cent quarterly dividend, which I feel like is a lot less than it used to be. I'm just going off my memory, but that's only 36 cents a year. I feel like the GM dividend was a lot higher than that before, wasn't it? I remember. I mean, it's good they're reinstating a dividend, but it doesn't sound like it's the dividend that they used to get. So, full disclosure, I'm long some GM. Know that.
Yeah, it used to be, from what I'm seeing on the calendar, it used to be 38 cents.
Years ago, it's only ever 38 cents? Okay, so it's about the same then. So
yeah.
I thought years ago it was like 4 or 5% dividend, though. That's what I'm trying to get. Like, that's like a 1% dividend only. So
yeah, I could show you right
Someone
here.
said it was 3.8.
Yeah, it used to be more. You got to go back probably even further back, Mitch, before.
Here you go. You got it here.
Remember, yeah.
See, like 4%, 3% yield.
I think it was higher before. So I don't think this dividend is as high as what they used to have. And the stock is getting a lift from it. Not much. So Joel, what's the
pretty nice? Yeah, I mean, you just peeked your head over 40.
Yeah,
you
the algo is probably
the initial algo jump. Yeah. But for me, I would have gotten done at 39.75. I mean, there's just 3 tops there. There's another top here at 39.64. So resistance is resistance. I mean, it did take it out in the pre-market. I'd still be hawking 39.75 and probably some paper at 40 as well. That's what you came down. But definitely good news. Opening into resistance on a down day in the markets. Take those factors in.
I'm not that excited about it, though. I mean, okay, I get a 9-cent quarterly dividend. It's not like, boom, you just went, back to a 3-4% dividend. It's like, oh, it's a 1% dividend.
That's nothing.
Your annual yield. I'm just not that excited about it. So I think the initial algo pops like, oh, yeah, dividends, buybacks. It's like,
no.
Yeah, it's not that great. And think about the buybacks. They're fizzling here, too. Home Depot did the same thing last night. Now it's $15 billion buyback for Home Depot. Stock popped up significantly on that news, up to 329, almost 330. And now it's come back off, obviously, overall market hitting it as well. But it's barely up here on a day they announced a huge buyback.
One thing to keep in mind, at least in autos, is Tesla not partaking in the rally yesterday could start dropping through. We're keeping a close eye on that 900 level.
Yeah, I mean, it had its run. I mean, it had a great run, ahead of the market, kind of peaked out, with the market earlier in the week. So, I mean, you were at what, 650 to begin July? You're at 950. I mean, come on. That's a big move. So, yeah, losing 900 today, down 1361. Now 900 was looking like support. Now it's flipped into resistance.
All right, let's go to Bill.com as it's getting some good raise here. EPS at a loss of 3 cents, beating the loss of 13-cent estimate. Sales at 202 million, beating the 183.1 million estimate. Bill.com sees Q1 2023 revenue at 208 million on the low end, high end 211 million versus the 187.6 million estimate. So really higher than kind of the estimate there, even on the lower end to 208 million, and also sees full year 23 revenue at 955 million on the low end, 973.5 million on the high end. Estimate here also getting beat pretty badly here. I mean, that's a good sign there for Bill.com for their full year 23 estimate at 879.68 million.
You're still getting these crazy moves, and it seems like not necessarily crazy, but really big moves in stocks. It seems like every day. Like yesterday, what was it? Wolf, was it? WOLF, Wolf Speed,
Wolf,
which just had such a huge Wolf, which has had a huge move. $87 up to 112, closes on the high. I mean, fading some of these moves has been, fading the initial move on some of these has been pretty disastrous. I mean, you think, okay, well, it's over down at 100 yesterday, Wolf. Then it opens up at like 102, and then it runs another $10. So, I mean, these thinner stocks, like, and Bill is a thinner stock, they can kind of do anything. So I'm not just coming in here and saying, oh, yeah, this is irrational. We're in a bear market. Let's short this. I mean, it's not one of those markets where selling on the initial pop has, there's been some follow through sometimes. So danger, Will Robinson. I'm just staying away.
You do have some 15-minute support here, minor support. So you want to hold 172.50 area. That's what I'm looking at, $2.50 above that. And then I just gonna, if I was long today and I was not out there in the pre-market, I have a little bit of a sell zone for you. And that sell zone comes, you have a pair of highs. It's 177. And then the other high goes closer to 179. So let's go right in the middle, 178. That's what I'd be looking for on a pop. And then, of course, get a look at your pre-market high. But don't know where to buy it, but can definitely identify some resistance for you.
All right, let's talk about the Apple, and what seems to be advising out there is an immediate update to iPhone, iPad, and Macs to protect against a pair of security vulnerabilities that allow attackers to completely control their device. Apple said that there are credible reports that hackers are already abusing the vulnerabilities to attack users.
It always seems like there's a hacker somewhere here. Obviously, the stock doesn't seem to care whatsoever. It's not even down as much as the Qs are. I mean, QQQ down 1.14%, Apple down 0.93%. So it looks like to me like the shareholders don't care. I saw this headline break last night, and I shorted the stock on it, and then it didn't move. I was like, well, they don't care about this either. So I just covered it. And I mean, it's still the same. You can say, oh, well, it's moved down $1.62, but the market's moved down. It hasn't moved. And it's actually performing relatively well to the overall market. So they don't appear to care about this headline. I care. It doesn't sound great, but I mean, Apple is just getting a pass on everything right now. They come on fast money. They all preach sell it now. All four panelists are bearish the stock. Goes down for about an hour and then starts to come back up again. I mean, this stock, I don't know if there's money managers permanently buying the dip in this thing, but it seems like this stock is getting a pass on everything right now.
I got a new iPhone, I believe, last week, and did the conversion. It took some time, probably because I probably didn't do it right. But you know what? It was acting weird this morning when I wonder. Yeah, I
You
don't
got
know.
hacked.
Yeah. You know what I'm gonna do? I'm gonna forget about this. This is like, sometimes you get a trend line and it just bothers you. Well, that trend line bothers me because I couldn't get it right. I mean, I know there's a steep trend line in here, and let's just make it really steep. Wow.
Let's didn't go a lot further back than that. That trend line.
No, but you got to go because it takes it too far down. I mean, I don't know.
It looks pretty straight to me. You take that trend line all the way
All
there.
the way down? No, but it undercuts some lows. So you know what we're gonna do? Let's yesterday it stopped. Let's just go to the dailies, your old numbers. You haven't taken out your 2-day low. Have you taken out your 2-day low? Yeah, 172.57. So I don't think that's a relevant number. If this is bad news for Apple and they're going to hit this thing and the market's going down today, then you should get a look at 170, 150 because that splits the pair of lows from Monday and Tuesday. If this is now going to be just another free pass for Apple, then you won't see that 170, 150. You rally back, and I'm sure a lot of people would like to see unchanged in Apple, and that was 174.15. So there's your support, potential resistance in Apple.
Let's get Todd Gordon.
Let's go. Let's get it on right here. I'm sorry about that. Was just getting a little message for a little bit later. Let's go into it here. Bringing on our special guest today, Todd Gordon, CNBC contributor and founder at New Age Wealth Advisors, and one of the best backgrounds there. Let's go.
Good morning, guys. How are you?
This guy looks great. He I tell you, morning, he looks great. Like the background, his mic's always awesome. Nobody more professional than Todd Gordon, I'll tell you that.
Oh, you guys are too nice, man. I mean, listen, we sit home, we're buried in these offices. Why not have some fun? I mean, the hardware side of this bit, I enjoy it. I don't know. It's fun. With like the at-home worker, like we have access to such good technology now, man. Why not have fun with it?
That's it. Okay, we got to ask, what do you think of this whole Bed Bath Beyond fiasco here? The rally up from 10 to 30. Oh, Cohen's bought options, and Cohen's with us. We got Cohen. And then he dumps it all into it. And now, obviously, the stock's back at $10 here. What are your thoughts here on all this? I've given some thoughts, and I think some people like it and some people don't. But what's Todd Gordon's thoughts on the whole Ryan Cohen Bed Bath & Beyond fiasco?
I love it. I hate to say it. I love it. I don't want to see anyone get hurt. Like, obviously, anyone listening to you guys, any responsible, real trading outfits with capital on the line, have been warned. But I just tweeted about it earlier. I did CNBC talking about Bed Bath & Beyond, like it was April 12th. And I was just going back and I said, listen, guys, be careful. Everyone's saying, oh, this is the turnaround story because Ryan Cohen's involved and his is going to be the best investment, this and GME. And I said on air, I was like, guys, be careful. You're playing with fire here. And I got skewered on Twitter. And then they brought it over to the Reddit boards. And I was like, I literally had like second thoughts about what am I doing here? I mean, I got destroyed. And then on those freaking Reddit boards, I wrote a bunch of responses and then the moderators took them off.
Oh no.
Like you can't, like, you haven't posted enough, so you can't. I wrote them like, dude, I'm the one being skewered, and it was such.
You can't even defend yourself.
You can't even defend yourself. It was crazy, and I'm just like, guys, I mean, look, you guys are, you guys all traded through. I mean, I was indoctrinated. I remember like 98, 99. I was day trading on an AOL dial-up modem, internet stocks, and there's a few, I bought at $5 and went to $20 within a couple minutes and, trying to get an execution but I got skewered and that was my rite of passage. And these guys are going through it now. But yeah, I mean, it's crazy how many people, and I think it's kind of symptomatic right now. It's August. We're halfway through. It's quiet market, low volume. Yeah. We have sort of on the tail end of earnings season here. Meme stocks are back. And then Ryan Cohen pulls this. And I hate to see people get hurt, but man, just listen to professionals who've been through this long enough. Like, you should, I say good, and good for him, good trade. But it's nasty to see. I don't know. I hope that's not too.
Yeah. You hate to see people losing money, but at the same time, there was so much risk involved with this. I mean, when you're buying stocks and, that are going from $5 to $30 in a week and a half because Ryan Cohen bought some options, I mean, you got to analyze your whole investment philosophy here. We're going to squeeze them, Todd. We're going to squeeze those shirts. I mean, this is rah-rah cheerleading. And you know what? This stuff usually ends in tears.
It really does. I mean, you are literally swimming with some of the biggest sharks with the most nimble. I mean, they don't owe you anything. And these, just listen to the message boards, get behind and say, Ryan Cohen's is the best turnaround story. And somebody came back to me. He's like, you have no idea what you're talking about. GME and Bed Bath & Beyond are the best investments. I just like, dude, like, it's, I don't know. It's the rite of passage for newer investors coming in. Too much time at home, sitting in front again with all this fun technology and access to markets we have. But nothing's changed in 20 years, man. I saw this back in 98. Like, you guys have seen it. Like,
yeah, it's deja vu all over again. But I didn't know you were getting down and dirty on the Reddit boards. But Todd, we had you on over a month or so ago, and I can honestly say, you took the bullish, the bullish side of the market. That we had the turn. We are coming up, and now we're starting to see, it's hard to call it a turn until you have that big down day, expanded range down day. But let's just talk about the rotation here. And growth let us out of this, right? Kathy let us out of this and, made that low in May ahead of the market. Turned. I mean, it's turned a little bit. So growth, I mean, is this just like a pullback from a big move here? Or do you think the market's going to, start to get more defensive here heading into the second half of the year?
And guys, I have to, Joel, you and I had a great conversation. Again, thanks for having me, guys. We had a good talk last week, and I've been kind of, we made some moves in July, and thanks for bringing me back on and giving me credit. I appreciate it. This market was extremely bearish. Consumer sentiment, investor sentiment was horrible. Inflation, look at CPI and then PCE, look at those charts over multiple decades, and they're certainly scary, but the sentiment was so bad, it rivaled that of the 08 GFC when we almost lost the economy. I'm saying something doesn't square up here. So, and I'm asking you guys because, like, I've been kind of taking a summer break. I've been, mountain biking with my kids and hiking and doing different things. Like, but the market is fine. We've just gone sideways, and I'm asking you guys, like, what happened in the last week? I was at the Jersey Shore yesterday. I was surfing with my kids. what happened in the last week that all of a sudden we're back in defensive posture? Like, I'm listening to CNBC, my friends, like they're saying buy utilities, buy healthcare. Like, what happened in the last week? I'm literally asking you guys.
Triple D, do you want to go first?
Ha! I think we just went full FOMO. I think we just went on full like, okay, this is it. We're going back to all-time highs. I don't know. Like, you get these moves, and you know it, Todd. You get a move, and you start going up, up, up. Then you almost get like the upside capitulation, where everybody's like, I can't take anymore. The money manager that sold in June. It's like, I got to rebuy my stocks. I've screwed up, and they're chasing again. And I think we kind of did that, and obviously maybe it doesn't show up on the S&P, but it does show up on a lot of individual names where it got really excited in the last week. And I feel like that's how this goes. It's just on the downside. You get the, sell, 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 and then you get a little bit of capitulation. Same thing sometimes goes on the upside. You get the up, 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 and the upside capitulation. Maybe it showed up in the meme stocks. Maybe it showed up in some other names. But I think people are just like chasing everywhere. They just chase stocks.
But I'm sorry to interrupt, but like, am I off in just getting the tone of what people are saying in the market this week? Everyone's saying go back in defensive, go back in utilities, staples, go back into healthcare. Like, am I wrong in that? It seems like it's like, what did I miss? Like, we just had a massive 17% rally. Growth has been rotating in. I just looking over here on another screen. We came in March, kind of back to April, May, and then June. We got the good push. Earnings have been, I think, pretty exceptional. Guidance hasn't been as bad as they were telling us to be. But all of a sudden, it seems like, okay, like you said, FOMO. I mean, coming from record bearish sentiment, I'm not surprised, and that's why we had in our RAA, we run two main portfolios. We had about 20% cash in the growth portfolio. 14% of it was cash. 5% was actually short inverse QQQ ETF PSQ. Took it off July 20th. It's first sign of sort of a new impulse wave up, and combined with bearish sentiment. Like, I don't know. I think it was. Thank you. It was so far so good, but I just see the market now consolidating.
Yeah, there
sideways before the next move up. And I'm just saying, like, I don't know why people are getting bearish all of a sudden the last.
Do you think the next move is up or down? I mean, we've had, so that's a tough question too, and I'll throw you because we've had the big move down, we bounced back. If the next move is up, we're V bottoming out of here. I mean, that's the way it would look on the charts. If the next move is down, then it's a continuation of the overall bearish trend. What's your thoughts?
Yeah, so I'll throw my technical hat in here. I'm just looking.
Yeah, you're good at this stuff, Todd. We appreciate it.
No, thanks. I appreciate it. So that first little correction off the June 20th lows, like, what was that percent decline? That was 5.6%. So using the technical model, you'd expect, there's a little bit more of a directional push down there and into July. So this wave 4, again, I'm getting I still do a lot of Elliott and Fib in terms of timing, but we have longer term portfolios. I'm always trimming and adding and stuff. So I still, trade, and I still watch the markets like as if I'm a trader. So if we get a push down, Dennis, I think it should be a sideways sort of time buying move, maybe down 2, 3, 4%. And then I do think we move up. I think the lows are in. I was just listening to Jim Paulson, who I respect in CNBC, and he's like, okay, so Melissa Lee was asking him, is inflation stubbornly high? I'm like, okay, yeah, but 2 years ago, all we would talk about is deflation and negative yields. Well, if you look at real yields, look at where rates are, we've sort of normalized a little bit. And Jim was saying, you look at, and I got to go back and look at this, CPI rarely does a topping process. It's sort of a up and down. It sort of detops.
Oh.
And I thought that was interesting. I didn't even have time to jump into that. If you okay, so if inflation is coming off, you look at commodities. I went through all the commodities, went through the ags and the meats and the metals and a lot of them are coming off. Even some of that stubbornly high meat. There's a lot of stuff going on in Texas that started to come off here a little bit. So commodities are coming off. Housing is obviously coming off. We're seeing some pretty good moves down there. The dollar's acting strong, which is a monetary policy tightener. A lot of people are trying to tell me that dollar strength was a sign of 08, risk aversion. And I'm saying, I don't think it's 08. I think it's more, the rest of the world selling their local currencies to buy dollar, to buy U.S. stocks, because you look at the Chinese slowdown. We've known about that forever. That was the lead article on Barron's. I think the U.S. stock market, it's pretty richly valued, but right now it's the only game in town. And And, commodities aren't working. Fixed income is still a losing proposition with where inflation is. So I think it's more like a 98, 99 relationship. I'm not saying it's a tech bubble, but the rest of the world buying US dollar to buy US stocks.
Yeah.
All right, let's talk about your largest holding here. We're on the line with Todd Gordon. He's a Benzinga contributor and founder of New Age Wealth Advisors. Tesla had a great run, led the market up, ran into little problems here at 950. Your largest holding, big move up. Tell us what you like. Also talk about what you like it. You also have Ford in your portfolio. And what's next? What's the catalyst? Why are you holding on, keeping that as your biggest position?
Yeah. So again, thanks for having me on. You guys did that. I had a good conversation with Gene Munster and about Tesla, and I just look at the earnings. You look at Ford, you look at GM, you look at the margins in which Tesla's operating at. They're making as much money on the bottom line as Ford and GM are, selling 1/4 of the amount of cars. I mean, the obviously the debt, long-term debt on the traditional automakers is massive. They're trying to unwind it, but you look at the financials in Tesla, look at the margins, the operating
way more efficient.
Awesome. Way more efficient. And then, my longer term thesis. Okay, so before we jump into that, like Elon gets mixed up in the Twitter war, and then his PR stock, his reputation takes a big dive on this. But I'm looking at Tesla through this whole market downturn on a relative strength point of view, with earnings that were pretty strong, and Tesla continues to hold a lot of relative strength compared to the broader market. So it's like, dude, how can you not like it? I threw some back at the end of July. I did a little option trade from like 800 up to 880. I think I made some good money on that. I'm back in a little bit of an option trade. I'm losing money in it right now. I think we might go sideways on Tesla, but I think the real, from a technical point of view, 1,050 or so, I think is going to be the real test. And longer term, I think I hate to say it, I think the cars are still ugly. I don't know what you guys think about that. Once they make some cool cars, maybe I'll look at the Cybertruck. But my whole thing is, the traditional automakers are fighting the game of trying to get a battery and secure rare earth minerals that will go into a battery. They're playing the EV game, where Tesla's playing the driverless autonomous game. And they've got whatever the figure is, 10, 20x amount of miles driven being pumped into their servers, trying to play that autonomous driving. And I think once they hook up Starlink and they offer continuous internet coverage, and they sync up and get that data up to Tesla servers, whether through the passenger cars or the taxi fleet, like I think Elon's going to win the autonomous game, whether it's taxis or it's gonna happen. Like tell me how I'm wrong on this.
I'm a huge Elon Musk fan. I've said it on the show, and people think, oh, I don't like Tesla. I've just never been invested because I couldn't wrap myself around the valuation. But I get it. Yeah. But I get it. I mean, this company is way more efficient than General. It definitely should trade with a multiple way higher than General Motors or Ford. Should it trade 10 times that? I don't know. That's where, if it was to come in and give you, maybe it did give you a shot back in the 650, 700 area. Maybe that did give you a shot back in June and July. But, if it was to ever come in back down, like it fell 50% from these prices, I could be talked into buying Tesla too. I love it. I can't buy something 100 times earnings. I just can't bring myself to do it. It's not in my blood. But it doesn't mean I hate Elon Musk and I hate Tesla. I'm the opposite. I love Elon Musk. I love what he's accomplished. I think he's way more efficient. I think it deserves a multiple a hell of a lot higher than General Motors and Ford. I just don't know if that multiple's 100 times earnings.
I mean, he's trading 72 times, 73 times forward earnings, right? It's not. So next year, it looks like markets are expecting, what are they looking to make on an annual basis? EPS, they're looking to make $16.92 a share next year into 908. So it puts you 72 times forward earnings. I mean, is that
what a steal this was just 3-4 years ago? I mean, you just look back and you think like, I don't know who the analyst was, but when Tesla was in the gutter and it didn't go anywhere for like 5-6 years, do you remember that?
Yeah, I do.
Todd?
I do.
It was just sitting there around $100, and there was an analyst, I think it might have even been Guggenheim, that said, looking forward, this company can make $20 a share. And that was before the 5-for-1 split. I mean, that analyst, and then he was saying $100. He's like, if it eventually gets up to $20, it's trading like 5 times earnings right now. And it really was back then, but we couldn't wrap ourselves around it because they were burning cash and everybody had the Tesla queue going on and was going to go bankrupt. That did not happen. Musk proved all those people dead wrong. And I'm glad about that. you know, because I think the cars are awesome. I think what he's done is amazing. And I wish I would have been, and I was one that wasn't Tesla Q, and I had puts sold, you know, and me and Jeremy Newsom were like, I don't think it's going bankrupt. And I was selling like the $100 puts I was selling back then for $20 or $25. It was crazy.
Man.
But I kind of wish I wouldn't have been selling puts. I would have been buying the stock. Because I got to keep my premium. But the stocks went way up, and then you didn't participate.
And you never got put the stock. You never got.
Yeah, I know. I never got the stock. I just got the free $20. But I mean.
I have video on YouTube. I was short Tesla, and I think 170 was a low. It's like on YouTube. I actually had like put spreads or whatever. I forgot the option structure. I bought Tesla at the low, but it wasn't to buy it. It was to cover shorts. But I mean, yeah. So it continues to go. I'm not a Tesla fanboy. I mean, I like what Ford's doing. They're making some pretty significant investments in their EV plan, the F-150 and the Mustang. We'll see. You know, I'm bullish. I want him to just look at the financial house there. It's a far cry away, but you know, I mean,
hey Todd, I want to get interest rate hike talk here out of the way. Fed rate hike possibility. You also showed on Twitter an interesting tweet about a recession 2 quarters after amazing above trend growth. You're also throwing everything together here. Talk about the Fed rate hike, where we're at as far as the recession goes, and then looking forward at the S&P and what, where it's trading at and what you think it may be trading at.
Thanks, Joel. So I guess this conversation's about a month old at this point, but everyone's talking about recession, 2 quarters of contraction constitutes recession. We'll see if they actually label it. But I just went back and I said, okay, so what happened in GDP in the quarters leading up to these two contractions of 1.6% in March and 0.9% in June, which, as you know, is going to be revised. But you look at post-pandemic, and you look at the average GDP growth after the pandemic. It came out to like 5.3%. From December of 20 up until December of 21. So we got 5 reports at 5.34% growth. The average 85-year growth in GDP is 3.17%. So you had like 70 or 80% premium on above trend growth, the GDP post-pandemic. And then you come off 2 quarters for 1 or 2%. And it was like, oh, it's a recession. Okay, well, but context matters here. Right. I mean, we just had really strong post-pandemic growth. You can say, all right, fine. It's the Fed injecting liquidity. And, we continue to have a very strong Fed balance sheet. They are going to obviously do a little quantitative tightening, but on a percent basis, it's nothing. So I think the economy is continuing to be very strong. I think the earnings have been very strong. You look at, there's a big debate here as we're going into potential yield curve inversion. I think you're going to start to hear people say that. And something I watch, guys, is the 2-year Fed funds spread. And, we're coming down to inversion. But if you look at the last few times when we got to inversion, and I've got the dates here, it's 2008, 2001, 98, and 91. And if you guys know your history, as like you guys do, I mean, that was all some kind of significant market event where the Fed was cutting rates to bring the federal funds rate down. And that's what caused the inversion between, that's when you get a flat Fed funds, which is effective a 30-day or 90-day, whatever, and a 2-year. The 2-year is about 3.3%. Fed funds is about 2.38. We have another 100 to go. But the market knows we're going to a terminal rate of 3.75%. I mean, there's no surprises in that. And I mean, is the Fed going to come out? Is there going to be another disaster like those dates I just mentioned where the Fed's going to have to slash rates and that might sell off the stock market? So if inflation is going to be, perpetually high, which on a relative basis, I don't think it is, we have to count on another disaster for the Fed to slash rates to sell the market off. I think we're getting mean reversion. We're getting volatility expansion. Like back in 2016 and 17, the Dow, you look back 100 years, the realized volatility in the Dow was the lowest in 100 years. So we're getting more price discovery. Interest rates are going up. I think it's a sign the Fed's trying to get out of the way as they're behind the curve. I think it's a good thing for the market. And the consumer, I think, is held up really, really well. 5-year tips, I think, was looking at 3.5, 3.75, 5-year expected inflation. It's down to 2.6 now. So I I think, if we get a little bit of pullback, Dennis, to answer your question like 15 minutes ago, I say buy it.
One more, Todd. One more, because I
Yeah.
think there's a typo. You sent me some notes, and I think there might be a typo in here. Okay.
I know where you're going with this, Joel.
Are you ready? Drum roll, please. Where is your long-term Dow count, and when's it coming?
Yeah, I threw this out on Twitter. Yeah, so where is this count? Yeah, I mean, we could be, just looking at. So listen, I'm an Elliott guy. I've gone in the closet. I just can't take the abuse. People just don't understand the, they just don't understand. They just can't open their mind enough to it. But classic Elliott is rooted in Dow theory. It's just three main advances, right? At the largest degree of trend. And Charles Dow penned that. And, if you look at, some of the biggest advances post 29, that was 29 up into the stagflationary 70s. It was like 980%. And we had the 70s. And then from 82 up to 2000, like that was another 1,400%. And then we set down in 08. So from 08 to now, we're 450% from the lows. So, each economic expansion that we've had post 29, should be somewhat related both in price and time. And if you look at, some of the gory math, I've got targets in the Dow anywhere from 40,000 to 63, 64,000. When that happens, I don't know. I can't.
I saw 66 on here. It said 66.
Okay. I mean, it's actually 63.4. So that was a typo. 64.
Dennis, you better get long.
I gotta get back invested. I went to the sidelines a little bit here. I gotta get back invested.
Now Dennis is he's got to go. No, Todd Gordon, Benzinga contributor, founder of New Age Wealth Advisors. We kept you for a long time, Todd, because you just give us great information, and you really give us information that we really don't provide our listeners from. We try and do the fundamentals, but we really appreciate. I explained to you why I'm not coming out to the Traverse and stuff. So I'll try and pick a winner for you in that. But just great to have you on, Todd, and we're going to do this on again real soon.
Thanks so much for having me. I appreciate it, guys. Have a great weekend, and doors always open, Joel, in Saratoga. And anyone wants to come up, that.
Okay. All right. Thanks, Todd.
See you, Todd.
All right. We went a little bit long there.
That's all right. We go long for Todd.
I let you guys go. You guys were killing it.
He's good, man. And I didn't even get to everything that he wanted to cover.
I know. We could ask Todd all day.
Yeah, he's got a lot of stuff.
He mentioned some things I like. Dow theory, Fibonacci's, but we won't go to those with you guys.
We like the 50. Me and Joel like the 50.
Yeah, we're Fibonacci. Yeah, we
got the 50. I'm a Fib fan, man. I like the 50.
I'm a Fib man.
You're not a businessman. You're a Fib man now, Dennis.
Man, 50. All right, we got 1 minute. About the
3A. What? Yeah. What do we want? We don't even have time
just overall market. Yeah, just overall market.
Market.
What should we be watching?
I'm gonna let the trip go first. What do you say, Triple D?
I'm waiting for a bounce. I'd sell more stocks, but I'm not gonna sell it down when they were down 40 handles because you know what they do. They come in and buy it again. So I don't think we're just whooshing down and this is the end of the world here. I do think that it's still per intraday raising cash. I'm selling rips. And when I'm trading, I'm doing a little more. I'm still buying dips, selling rips, short rips, buying dips, still trading. Kind of trading market neutral, meandering along here. It's dog days August. It's quiet. You're not going to see any really crazy moves, I don't think, until you get into September. And then it gets a little bit more interesting. So dog days of August, trade the chop by fading the chop.
Yeah, drilling down a little bit. I'm just, we did take out that low from Monday, right? And so we have a new low for the week and a pretty tight range week, less than 100 handles. So I've been trying to keep my bullish cap on this whole week and battling you guys. And I'll just say I will lean on that pre-market low today, 42.41. If the bulls can defend that early and then you drift up to 42.70, 42.75, maybe make a run at unchanged, then it's okay. You take out that pre-market low on a Friday, and I think the Bears I think the Bears may have a little control. I got to
And
hop
big
off.
thing, Joel. Don't forget option expirations.
Option
today.
expiration.
So you're going to see some wild moves here at the open and the close. Remember that.
Yep.
Balances just flipped to buys here. I'm not sure if that's going to affect it, but we know they flip around a lot on these days. There'll be some wild volatilities. You get some opens, that might be too high, opens that are too low. You might get some closes too high or too low. I typically fade those moves. Like a stock's opening way up, so I'm like, I'm going to buy, it's going higher. The money's being made fading the moves usually today, on days like this.
And I just want to thank everybody, Mitch. Because I got
the RSI, Mitch.
It's RSI. Yeah.
RSI.
Before you do the RSI, I just want to thank everyone that turned out yesterday for our event. Absolutely incredible turnout.
Yeah,
I mean, these questions, they make my head spin. We tried to get to as many of them as possible. Great presentations by Dennis and Rob. And I thought about it. I was going to text you about this, Dennis. What about the timing of that event too? Was what's going on with the market, what's going on with the meme stocks, and just trying to provide education. You can still go to the site. I believe later on today, it's still available for purchase. So it's still there. I thank you guys from the bottom of my heart. I'm going to go over to PMP Plus and do some more tickers. I'm out next week. I told you 100 times.
Oh gosh, Joel, who takes more vacations than you and Tim? Who takes more vacations than you and Tim?
I'm sorry. I didn't put it in an out-of-office request, but going out east, going to do some biking and hiking with Lisa, going to visit my sister. Actually going to be in the state of Ohio.
You just were on vacation a week ago.
No, it wasn't.
I want Joel Elconin.
It was the second week in July. It was the second week in July.
I want Joel Elconin and Tim Quast's life. These guys like half time on vacation. It must be nice, man. Me and Mitch got to sit here. We don't even get a day off, let alone a week off.
Will you guys be nice to Mitch and Dennis, please? Chat, Carmen, Chelly, Pablo. I know gets a little rough on you guys. Everyone, be nice to Dennis and Mitch. They work hard. Okay, so I will. I'll be back. A week from Monday. So everyone,
you enjoy the fun in the sun, Joel. Enjoy the fun in the sun. All right.
Get
out of here.
Mitch, me and you stock
Plus, and
we don't
this
take
is the
vacations.
new team, right?
We don't take vacation. When did I take a vacation? When have I been on a vacation? I don't even know if I've been on a vacation in 2 years.
Dennis, do they give vacation days in Canada?
I don't know. Not very often. Actually, they do. I just don't participate in any. Canadians have lots of vacations. I don't even think they work Fridays in Canada, half the people.
What?
I know my house. I always go over down to Friday. I'm like, no crew today. Nobody works Fridays.
You got an extra room in that house,
over
man?
In Europe, 4-day weeks. YOLO.
Yeah. Dang, Dennis, you didn't build me the little house next door. I was coming.
Oh yeah, we'll get you in there, Mitch. I can get
you.
I can build you a little house next door. We'll move Mitch in.
I'm ready. All right, Dennis, you have a good one. Get into this market. Do what you do best, which is, of course, trading. And like always, if you guys caught yesterday, Dennis killing it like always, talking about relationships.
Good. I saw Money Mitch sneak in that chat for a little bit.
I had to, man.
Around the background. He's always watching. Money Mitch always watching.
I mean, when there's knowledge, I'll be there. That's for sure. And that's for sure what you got yesterday was some great knowledge.
Great.
And then I'm learning. I'm still learning. And that's what you always got to be. Always learning. And so I appreciate you, Dennis. Have a great trading day.
Mitch.
All right, we're going to keep going here. Let's take a look at the overall market as we get into it. Now I can toot my horn a little bit there with the RSI turnaround there at extremes. We've talked about this in the past. I tried to explain this, how I look at RSI, and that I only call it out on moments of extreme. And you take a look here. Look at those spikes above that 86 level. They always turn around and look, boom, turn around there. So now we're getting positive confirmation as we start breaking through Monday's low, which was 424.71. That's the level I'll watch for resistance today. As you can see, we're right below that level. It was using it for a little while here as support, then broke it, started using it a little bit above there as resistance, maybe the 425 a little closer. But I'm going to be watching that low to see if we can stay below that. If we do, I'll be looking bearish towards the open here. Let's take a look at what other stocks you guys have on your radar. Throw it on up in the chat if you guys have a stock that you guys are watching. One stock that I feel I got right also yesterday, I started talking about DraftKings turning around, as this was a stock that just went too far, too fast. And I called this out yesterday, right near these topping candles. Now you're seeing this come on back there. I think this eventually even comes back maybe to 16, 17 where I sold it. So I'll be watching stocks like this. Throw up stocks if you guys have one here in the chat, and I'll take a look there. All right. What other ones you guys have? Watching but never give a shout out for the chat. What do you mean? I always give a shout out for the chat. But let's keep going here. What other ones have you mentioned here? Apple. Okay. Apple here at 175, pulling on back here a little bit. We'll see what happens here in Apple. It's up there towards 175. Of course, a lot of people caught some of those kind of security concerns that were mentioned about Apple. Yeah. Now, is this the topping of Apple? And look who we have coming on in. AB in the house.
Yeah, I don't know if you saw, but I saw on Twitter yesterday that Apple's CFO or one of the executives is selling some stock. That's not a good sign if you're a shareholder.
Yeah, and did you see the hacks? There were some hacks.
No.
Did you check your iPhone, dude? Your iPhone could be taking control right now.
Really? It's okay. So I got a Venmo hack the other day. That wasn't really okay. It wasn't okay. Listen how scary this is. So I'm on the golf course with Randy and Michael. You know, everyone, not everyone, but there are people on the golf course with us. And Randy calls me and is like, "Hey, do you still need the money?" And I'm like, "What are you talking about?" And he's like, "I just got a Venmo request from you that said like left my wallet at the store, need $300." And I'm like, "Oh, that wasn't me." So he's got me thinking someone hacked my Venmo, and I'm freaking out because my Venmo's linked to my bank account, right? If someone's in my Venmo, they could just Venmo $500 out of my Bank of America checking account, no problem. I log into my Venmo, I don't see anything, whatever. Other people, Michael Murray, someone else reaches out to me and says they got the same message. What I think happened was someone created a Venmo account with like my profile picture, my name, and started reaching out to people, but they didn't have access to my actual Venmo account.
Not the real.
I didn't get a true hack because if they had actually hacked my Venmo account, I would have been screwed, right? They could have just Venmoed money out of my bank account. They could have Venmoed money out of my Venmo.
Well, Apple users are checking their phones today. They've been advised to immediately update their iPhones, iPad, and Macs to protect against some security vulnerabilities. So
I'm gonna do that. I'm gonna do that right now. So, Mitch, real quick for All Access. So for everyone out there in the audience, for All Access, we will be having our All Access show today. We've got 3 great companies joining us. We had 4 originally. The first one is unable to make it now, so we were gonna start around this time. We're pushing that back a little bit. So in the meantime, I figure I'd hop on here, hang out. Mitch, if you want, I can hang out here for a second, give you a break, but I think we're going to keep this stream going until about 9:30 or so and then transfer over to All Access.
Sounds good to me. Let's keep on going. Let's take a look at some of the stocks that people are calling out.
Last thing on the All Access, everyone hanging out in the audience, if you guys haven't hung out for an All Access before, essentially we'll be bringing on 3 companies, give you guys direct access to those companies, and we will also be giving, we are doing a giveaway. So I'll get the exact details on that, but I believe it's 3 winners will win $50 cold hard cash. So if you want to start your Friday out right, you want to start your weekend out right and win, $50 real quick, stick around for All Access. And honestly, I mean, think about it, right? A few hundred people hang out, 3 people are winners. You actually got a decent chance of winning today. So
Aaron, I want to point out that last time we did this giveaway, I think we only had, 5 people enter. So you have some pretty good chances. Definitely join the stream and be sure to sign up when we drop that link.
I knew I should have answered.
I told all my buddies about the giveaway. So I have about 10 of them entering, and I have a standing deal with them where if one of them wins, I get half of that. So
at least a beer, right?
At least a beer, yeah, something.
Yeah, let's definitely get... I tried to laugh like that, but it wouldn't work. Let's keep going, guys. Yeah, definitely check it on out, and we'll make sure that we throw up that link in the chat. So if you guys get a couple of moments to sign up, go ahead and do so before the bell here. There's some stocks definitely being mentioned in the chat. I'm going to scroll up a little bit, and we can go through some of these as we get towards the open. What do you think about Oh, well, I don't know if you're doing your news thing, but what about Ryan Cohen, AB? What do you think about that?
Oh, that was on there. I mean, So here's the new storyline, or I guess what the media is kind of running with is now, Ryan Cohen bought a stake in Blackberry, or not Blackberry, Bed Bath & Beyond, essentially used retail investors to pump up the stock to get this narrative going, get people to buy it, and then he used the retail investors that bought this for the short squeeze storyline, used them as exit liquidity. Said, okay, now that we've gotten some volume, now that we've gotten some action, I'm going to get out of here. So I think Ryan Cohen made a nice few bucks on the trade. I don't even think he made as much as the 20-year-old Kit, though. But either way, Ryan Cohen officially out of Bed Bath & Beyond. And honestly, this is, I mean, I don't know how many, opportunities you get. You get about 2, right? He killed it with Chewy, right? And then with GameStop, we talked about this with Luke on the stream yesterday. There hasn't really been any substantial business changes to GameStop, which a lot of people thought with Ryan Cohen coming in. And then now with Bed Bath & Beyond.
Yeah, and then remember they did that 4-for-1 split, and I think you just cracked that price point now. Do we just start getting this DME to start giving up here? I think you're going to have some people give up on him.
It was funny because I remember when it was disclosed that Ryan Cohen did open his Bed Bath & Beyond stake. At the time, so the stock skyrocketed just off that news. I want to say it went up like 10, 15% or something. I remember maybe even more because maybe there was already some short interest and it kind of started to squeeze a little bit. But I remember talking to Spencer about it at the time, and I said, there's really nothing stopping Ryan Cohen from buying this stock, seeing it go up 20% in a day, and saying, all right, yeah, that's $1 million. I'll take that. But you really only get one of those. Like, you only get one of those. You can only use that bullet one time. And then, people probably won't do that again. But he kind of did that. He just took a little bit longer than one day.
Now, the one thing that I think is the question is, do people just sell out at like GameStop because they don't want to be a part of anything that Ryan Cohen does? I think that's a question that you can actually ask yourself.
100%. Yeah. I mean, I think that's certainly a question. I think you probably will see that today. I mean, you see, I don't know. How's GameStop doing? GameStop's down 8% pre-market.
Yeah.
AMC down 6%. Bed Bath & Beyond.
I just don't know how you trust GameStop after this, right? How do you trust?
Yeah, well, and I mean, to be fair, I guess, and I'm not trying to give Ryan Cohen any slack here, because it does seem like he kind of screwed over a lot of retail investors that that believed in him. But there's also a chance, that Ryan Cohen looked at Bed Bath & Beyond, saw some opportunity, invested in it, and then over time saw that, hey, maybe that opportunity wasn't as great. Like, as investors, you have the opportunity to cut your investments and stuff, but I don't know. It seems kind of, schemy what he was doing, but that's the storyline everyone's running with, is that he was, kind of out to, he basically used retail investors as his exit liquidity.
Yeah, the worst type of person that I always say is a person that acts like they're on your side, but really they have their own self-interest. But let's go ahead. Let's get into some other stocks out there that are moving and what's on your radar. Of course, I'm going to be watching to see if ARKK continues to come on down. That's what I refer to as the growth names, right? And a lot of this is software, application, and biotech names that have been really getting hit hard lately. Stocks like Fate turning around. Stocks like Beam Therapeutics turning around. And I've been looking to see if CRISPR is going to get hit hard also. You can see it's down also. These were the stocks that kind of really raised the ARKK, and that's why I'm watching like IBB. You can see it here, how this biotech ETF is starting to come down here in the last 2 or 3 days. Moderna is also one, of course, in that biotech, and look how fast Moderna is coming down here after a good-looking chart. It was starting to come back here. Now it's come down really fast in the last couple of days. It's down about over 17%. And so that's almost in its own bear market there in the last 3 or 4 days. That shows me concern about rotation away from healthcare, moving elsewhere. Where is it going to be moving to? Well, I'm keeping an eye on some value trades or some defensive names to see if they can get some lift, like PG. I saw CL setting on up for a breakout. That one's continuing that nice little setup here. You can take a look here on the monthlies. It's really trying to break and push through, getting to that 85, 86 area. So these are some stocks that are on my radar. What has lately been on your radar, AB?
What about Wingstop? Have you seen this?
The wing. Let's take a look. Ooh, nice little bounce back there. Man, that thing's come pretty far.
Do you know why we're talking about Wingstop right now?
Why?
I don't know if you saw in the headlines yesterday, but chicken wing prices, or wholesale chicken wing prices, are now back. They are now cheaper at a lower price than they were before COVID. So chicken wings were one of the things that, one of those commodities that during COVID got really expensive, and people were freaking out about, oh my God, chicken wings are getting so expensive and all this stuff. And now they're cheaper than they were before COVID. Actually, they're cheaper than at any time in the past 4 years. And if you think, okay, that's great news for you and I, Mitch, we're going to go to Wingstop and get some cheap, buy one, get one deals on wings. Wingstop's not really saying that. They basically have already come out and said that how great that the dropping price in chicken wings is for their margins, because they can essentially keep the price the same for customers while their input costs shrink.
You know how it is, and then there's been a lot of talk of this, right? With inflation going higher, boosting a lot of prices. Yes, inflation might come down, but the prices probably won't. So we get screwed in all of this. And so that's why there's so much backfire to the Fed for creating this inflation, because, at the end of the day, I think we created this inflation during the time when we just pumped money into the system. And who gets really left out here? I think it's your average consumer, because prices are going to continue to skyrocket. And if anything, they're not going to come down, even though inflation and their margins, because businesses are just going to be like, there's no point in bringing our price down. We're just going to increase and make more money on our margins. So this is something that we need to keep on.
Yeah, I do think, and that's, as corporate worker in the chat saying, that's how an example of how economists, talk about prices being sticky, that just because input costs go down doesn't necessarily mean that price passed off to the consumer is going to go down. But I think with this time around, there is a lot more attention on it, right? I think a lot of people who maybe aren't into the economy or into business see this, and they see, right, most people aren't looking at the CPI and stuff, but they'll see things like the headlines of gas prices and chicken wing prices. So if they see the fact that chicken wings are now cheaper, but that companies aren't changing the prices, there may be some more backlash on that now. So I don't know. We'll see. I'm confident at least that the drop in prices will, if it doesn't lead to lower prices for us, it'll at least lead to, like you said, Mitch, less inflation. Doesn't necessarily mean the prices are going to go down, but maybe they stop going up.
Did you see this move today in Foot Locker? I don't know if you've been buying up some shoes, AB, but looks like somebody has. Their earnings report wasn't even that great. They just fired their CEO and hired somebody else. And I guess this is why the stock is ripping here in the pre-market. It's up there towards $40 now. And their earnings were kind of, they're down year over year. Sales missing. The EPS consensus is given a lower EPS. Comparable sales decreased 10.3%. The market doesn't care. It's looking at Foot Locker towards the upside. I know you like your Crocs. Maybe this helps.
I do like my Crocs.
Crocs. It's interesting now. I'm going to be watching Foot Locker today. I just don't see how this move even got started here. But, hey.
Yeah, is this one that has a bunch of short interest?
I don't know if it has high short interest. One thing that we did check out in pre-market prep with the guys was that we talked about how it has a very low PE ratio. It has about 7 forward looking. It's not like, something in the 20s or even in the 15s where the average is for the industry. But man, this is ripping there. Foot Locker getting Ulta's CEO. Is that what it is? Is it because they believe in Ulta?
Oh my God, dude, look at Ulta. Ulta's been a monster. Some of these, I need to.
Is that what it is?
Someone in the chat. I need someone to help me find some of these stocks that I don't use. Like, I don't know, Ulta, I don't know, but like a lot of these stocks
you go to Ulta, AB.
Yeah, you're right. A lot of these stocks where I gotta get the gift cards. You gotta go there and get the gift cards.
They're
They're popular. The gift cards are popular.
They got some cologne.
I need someone to help me do some research on these stocks that I don't use, because like all these stocks where the customer base is primarily female have like been doing so well over the past few. Like you look at Ulta, you look at Lululemon.
Yeah.
That's why we had that stock guy on Twitch talks about don't bet against Becky. If you look at what the portfolio of returns is between like Ulta, Starbucks, Lululemon, it's incredible. These companies just have such a good loyal fan base. And yeah, I don't.
Hey, we'll see what happens.
Estee Lauder, yeah.
Yeah, I mean, there's a lot to look at there. We'll see. I mean, a lot of bottoming. I don't know how you feel about this market now. What do you feel? Do you feel like we're just going to make our way slowly but surely up back to all-time highs? Doesn't mean it needs to be this year, but do you think that we ever get back down towards the 370s, let alone the 365 bottom?
No, I don't think we're touching those bottoms. I think if we have a little pullback here, 2, 3, 5%, that might happen. We've gone basically straight up the past 2 months, so I wouldn't be shocked to see a little pullback here, but I don't think we're going to test the lows.
Hey, good call out there. We'll see what happens, right? I mean, that's what a lot of people are starting to question. Will it come back all the way down there? I mean, that's a big move down if it's going to go back all the way over there. So I don't know what brings us down that far. Of course, it could be China tensions, but it's just something that we got to keep on watch. Also, Build.com was having a great move this morning, so we'll keep on watching that towards the open here, see how that pushes, see if it can get that next step up. Well, we got about 7 minutes towards the open. If you guys got stocks you guys want to check out, keep throwing them up. We'll go ahead and run through them. See anything in the chat that you want to cover there, AB?
Let me go through the chat real quick. Looks like Jamie's looking at Visa. I don't really watch the credit card stocks a lot. I probably should. I don't know. Nike. Someone's asking about Nike. That Nike could move off of the Foot Locker news, retail sales. Here's my thing, Mitch. Is I think right now, with a lot of names like Nike. I mean, Apple's different because Apple's already pretty much back to all-time highs. But I think a lot of these names like Nike that have such great, brand recognition and like a loyal customer base, a lot of them are still trading down 20, 30%. And I'm starting to look at a lot of those names and just see them as buying opportunities, saying, hey, look, if we, even if the economy, isn't firing at all cylinders in the next 3 months, if we're edging back toward normal and working back toward there, these names like Nike, these names that have a great, customer base are going to be able to bounce back pretty quickly, because as the economy starts to ramp up and people are spending more money, they go to the names that they know. They go to the names that they like. You get an extra $100 in your account this month, you might go buy a new pair of Nike shoes.
Yeah, especially if AB sends me 300 on Venmo. Let's take a look at some other ones that have been moving. Looks like someone wants to take a look at Walmart. Oof, that's a hard call from here. I don't even know what to say at this chart. I mean, I was bullish in the past, but that was before we did this whole gap down, pull up, gap up, then pull down now. I mean, it could just fill this gap and kind of hold sideways. I would watch the low from Tuesday, 138.19. Right now you're at what, 138.61. So look to see if you break that. You could fill the gap today. I mean, it's not something that I would leave out of the realms for it to fill, but it's a hard chart to call.
Yeah, I kind of see Walmart similarly to where I see Nike, like a name that has, great brand recognition and a good customer base. It kind of is about your time horizon, right? If you're, looking to potentially buy Walmart and put it in like a long-term account, you're looking at right now an opportunity to buy Walmart still 12% off its highs. It's not a super big drawdown, but still, I mean, that's 12% off its high. That's a 12% discount. You go to Walmart, you see something on sale for 12%. It's not bad. So, names like that, where I think if you're looking long term, it's okay to add a few shares here. Now, if I was going to buy this as a swing trade for like a month or so, I don't know, maybe I wait a little bit to see if you give up some of those gains, and then maybe you maybe buy that back.
How do you feel about the Bitcoin stocks today? Bitcoin going down pretty fast, and these have run pretty significantly. MSTR, Mara. What do you feel about these? Do these come back down all the way to their lows?
Yeah, I mean, I think right now, Bitcoin, is kind of at it's like the overall market right now. I think it's just in this zone where it's really looking for some more direction from the Fed, because right now there's a lot of, essentially the market started pricing in that the Fed will pivot at some point in the next 6 months or so as we're seeing inflation coming down and maybe if unemployment starts ramping up and whatnot. But from all we've heard from the Fed, they're basically standing by saying, hey, we're still going to increase rates. We're still going to do this. So until we get more conviction that, all right, inflation's coming down, rates are going to start coming down, I don't think Bitcoin's, going to make any crazy moves from, it's at 21,500 right now. I don't think we're like, going to make any runs back up to 40K or go back up to all-time highs unless we get back into that environment where the Fed's cutting rates and you have a lot of that free money flowing around. So right now, a lot of the crypto investments just aren't interesting to me. There just won't be enough alpha baked into those returns until we get some more conviction from the Fed, until we get some more direction from the Fed.
Yeah, I think too many people thought that Bitcoin was just going to bounce back and then go back to 100,000. And one thing that I've always seen in Bitcoin is that it comes in waves. It has periods where it's in the news and it just stays in the news. And then it has periods where it kind of just washes out a lot of investors as it gets out of the forefront. It hits to the backside of the road. And then all of a sudden, boom, there you get another wave in Bitcoin. But when will that wave come? I think it doesn't come until really 2024. So who knows? This could be a bad couple of years for Bitcoin. The 4-year wave is what I look for.
Yeah, definitely. From a macro perspective, a lot of Bitcoin maximalists, a lot of crypto traders have been, hoping this could be the start of another bull run. But I just don't know. I don't see a bull run happening without, again, that action from the Fed. I did see someone ask about GovX in the chat. I haven't looked at any of the monkeypox stocks in a minute. This is one that, spiked on the monkeypox. I believe that day, August 1st, when this thing hit its high of the last, 6 months or so, was the day that Biden declared monkeypox an emergency. And you can see how that's kind of been a sell the news event since then, down about, 50%.
Yeah, I think this is no play for me now. These stocks love to do these runs whenever there's kind of these news that are driving the headlines. But to me, as soon as you see it kind of start consolidating, that's when I think that you got to get out of them. It's okay to be in them if you're getting the run and the run and the run and the run. It just keeps pushing on up. But there's always moments when that kind of turns around there and you get hit hard on GovX there. It went from $4 right back down to $2 and could easily be back down below $1 where it was. This was a 70-cent stock just about 2 or 3 weeks ago.
Yeah. So I kind of missed the boat on some of those monkeypox trades. And once I did, I wasn't really seriously looking at them for potential investments just because they'd already gone up so much.
All right. Looks like we got a new visitor.
Yes, sir.
Morning, guys. How we doing?
Waking up now with that voice. Let's do it.
Morning, Mitch.
Good morning.
Bree, I know we got a headline check coming up. Yeah, we're doing all right. We're doing all right. Got a headline check with Bree. Yes. We're going to look at the markets, look at what's going on out there, get things started for all access and get rolling.
Thumbs on up, guys. Take on over. Do your thing.
Let's do it.
All right, we're going to go ahead and go over to the next stream on All Access, so stick around. This stream will automatically redirect you there. Stay tuned.